Hey, folks, welcome to InTheMoneyStocks.com's weekend daily analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get underway here. This video is going to cover the days of February 19th, which is Tuesday, through Friday, February 22nd, 2013. Remember, the markets are closed on Monday for the President's Day holiday. What you see before you is the SPY. This is the S&P Trading ETF. And again, we're looking at a 10-minute chart. I have zoomed out on the chart to show you Monday, Tuesday, Wednesday, Thursday, and Friday's action. Now, what you can see first and foremost is that it was a pretty choppy week. This was options expiration week. We had a lot of chop, even though the market net didn't go very far. So we closed the previous Friday right here around the 151.80 level, and on Friday we closed at 152.11. Basically a 30 cent gain, give or take a little bit, maybe 32 cent gain on the SPY for the entire week. That strategizes out to about 2 to 3 points on the S&P 500. So even though you had a lot of whippiness, not a lot of action was seen. Now there were a couple interesting factors here. Number one, Monday, Tuesday, Wednesday, Thursday were the lightest trading days of the entire year of 2013, and actually to see as light volume as you saw for that many consecutive days, you actually have to go back to 2007. And what's eerie about that is that you're actually going back to a period where the market was actually putting in a major top before the late 2007, 8, and 9 periods where the market dropped over 50%. Now, I don't think in the short term that's going to happen. I do think, obviously, we will see a little bit of downside in the coming weeks, but I don't think you're going to see a massive downside move until probably later when we have our major cycle date, which is coming up in a month or two. And again, we'll release that major cycle date to our members. But I think what we are coming into is a minor cycle, which should take the markets back down. And again, if you know the proprietary time counts and you look at the charts in accordance with that, it does dictate that we should come into that period in the coming weeks. Now, notice here how we had such light volume on the first 4 days of the week and then huge volume on Friday. There were two reasons for that. Number one, options expiration. So you had a lot of kind of whippy action on Friday due to options expiration. This big drop late in the day on Friday is somewhat unusual. This was caused by Walmart. Now, a mid-level executive sent an email to other executives saying it was the worst February for store sales basically in 7 years, which is shocking. I mean, to think about how good supposedly the economy is doing, why on earth are sales as weak as they are at Walmart? I mean, the worst in 7 years, that means even in 2007, 8, 9, all those years, sales were never as bad as this at Walmart. What's going on here? Well, there's a couple easy answers. Number one, you had the payroll tax cut that went away as the start of the year, so therefore average kind of investors don't have that extra money in their paycheck. That's going to take a little bit of the ability to spend out. And again, if you think about it, those that generally shop at Walmart are kind of the average American, kind of those that make a little bit less money, and they're going to find it hurting them more when they see that money missing out of their paycheck taken as a tax now, which wasn't just a little while ago. So I think that's the major reason. The other reason could just very well be that you're having more and more cuts. I mean, we have the sequester coming up on March 1st, which is automatic spending cuts. The way it's looking right now, folks, it is going to happen. So the market, I don't think, has realized that yet, which is another reason why I think we could see a little weakness into that March 1st deadline. And again, everything I'm hearing is that the government, Republicans and Democrats, know that at this stage of the game, no one is willing to make adjustments. Therefore, the only way they're going to get actual cuts is to let these cuts go through. So, basically, in other words, no Republican or Democrat wants to take the initiative and propose tax cuts because they don't want to be blamed for, oh, you cut that or you cut that. So, therefore, oh, these are automatic. Oh, it just happened because we couldn't reach an agreement. Oh, it just happened. I mean, it's really honestly a bullshit excuse, but the fact is, that's what they're going to use to let it go through and just say, oh, well, it wasn't me. These were automatic. I mean, it's the biggest cop-out in the world, but I guess we should expect that from our politicians at this point in time. All right. If we go to Walmart, you can see that action on Walmart in the afternoon session. I mean, this was just a brutal drop on Walmart. It was already down on the day pretty sizably, and then when this hit, it was just monstrous. Then it actually fell, was able to float back up as higher executives kind of discounted it. Honestly, I think that was kind of somewhat of a shady cover up on a Friday afternoon. They want essentially on Fridays. You have to understand they want the markets to close as high as possible because it's a spending period. So by Walmart saying that and taking the whole market down, it's not a good thing for the weekend, right? If you think about when do most people shop, is it on Monday nights? Is it Tuesday nights after work? Is it Wednesday nights after work? No. The general time people are shopping is on Friday, Saturday, Sundays, and in this case, Monday because it's a holiday. President sales. I mean, everywhere's going to have their presidential sales. So you have to think about it in terms of that. If you want people spending, you need the markets to be as good as possible on that Friday close. People feel good about the close on the markets, where the markets are trading near 52-week all-time highs on the Dow and the S&P. Therefore, done. Out to the stores they go and spend. Obviously, what Walmart's telling us, though, is that those that shop at Walmart aren't necessarily spending as much, as these could be some really ugly numbers. So just keep that in mind, folks. And again, I do think we have to watch very closely tonight, Sunday night, and Monday what China does. China's been closed for a week. What are they going to do when they reopen after their New Year's? They have a week off for New Year's on their markets. Also, Europe. Europe's going to be a key catalyst here. Are things really improving that drastically in Europe? I actually fear that this coming week could be actually a pretty rough week for the markets because of those scenarios, plus what Walmart says, plus these cuts, these sequester cuts, these automatic spending cuts in the government. And remember, these spending cuts in the government will ripple through the economy. I mean, it's not just like, oh, we can just cut, billions and billions of dollars of spending. I mean, there are people that make money from that spending of the government that are going to take a hit. So, just keep that in mind. I think it's kind of the time to get conservative. I'm actually going to be looking to pick up some SDS, which is 2 times short the S&P 500. Depending on where we open on Tuesday or Wednesday, when I see the right level, the right setup, I will be looking to pick that up. Obviously, members will get the alert. If you're a member of the Research Center or the Intraday Stock Chat, I will let you know when I do pick up some SDS. But I am looking to do that early in the week, just a matter of where is the right price point to do it. All right, again, going to the spiders here, let's flip over to the daily chart. The daily chart just continues to hammer into this resistance point. I gave this resistance point quite a while ago. Even as up this blue line, we basically, it's interesting because every resistance point I give, we get these small little kind of sideways moves, and then it pushes up just a little bit more into the next one, and that's where we are right now. Now, the question is, does it stall out and start to come back down? That's what my expectations are. Even though I think we'll hit new all-time highs later this year on the S&P and the Dow, I still think that the market, just short term, look at this chart. It's a little parabolic. Look at how far away from the 200 MA we are. I mean, that's a drastic difference from 200 MAs all the way down to the 141 level. That's a pretty big difference. That's almost a 10% difference from where that 200 moving average is. So I would expect a pullback over the next couple weeks, probably taking us down minimally to about the 148 level, and I think there is a possibility we get all the way to the 50 MA in this area right here, right around the 146 area. It's not a big pullback, as I said, but I do expect that. Notice the volume on Friday as well. I think institutions probably utilized the news from Walmart to dump just a little bit and take some profits. Okay? So we'll see what happens this coming week. Again, I have myself situated. I'm going to continue to trade small caps, swing trade small caps, as they've been awesome lately as we continue to hammer out gains there. And I'll be continuing to look to add to my positions just a little bit on the short side in this upper range coming into that sequester. And again, it's strange because, obviously the chart's overbought, but now you can start to see the writing on the wall. I think the market, again, the government's been so good at kicking the can down the road on these spending cuts that I think the market just thinks, at least the average investor thinks that it'll happen again. They'll just kick it down the road. I think this one, they will make the cuts, folks. I do think they will. So that's going to be fantastic to kind of watch it play out. And obviously, another actually play that I'm going to be looking to play is the VXX. The VXX is an intriguing one as well. So keep an eye on the VXX overall. This is the volatility index ETF tracking one, basically trading at little lows. Super, super lows down here. Look at that chart. And again, I wouldn't be surprised to see at some point around the sequester maybe a jump to about the 26 level. So that would be a nice, $4 or $5 gain, about a 20% gain on the VIX. I think that's a fair possibility with the VIX trading where it is. Okay. Looking at a couple stocks, Goldman Sachs was down 94 cents on Friday, but in all fairness, look at that chart. I mean, so extended. Amazing to see the 200 MA all the way down at around the 115 level. To see it that low is pretty shocking away from current price. I just keep on telling my members, though, that this is your overall price point. All right, that's the price point you want. You want this level, the 160 level on the Goldman Sachs chart is the gap fill. If we possibly get that early in the week, I do look to short that on Goldman Sachs. I think that's a great little level. JP Morgan continues to be at the high range of the chart, trading just above this little bit of resistance, but I like the fact that it's been able to stall out here. It hasn't really blasted through this, which tells me it could be a weak breakout, in which case there's a possibility of failure. I just don't know how much downside, again, you'll get on something like this. Maybe in the best case scenario, pull back to about the 45.5, 46 level, which is only about $2 to $3 lower. So just be aware of that as well. Google, folks. Google needs to be talked about because it's such a strong stock. I called for this breakout above this line. It has happened. I am now saying to you this will get to about the 800 to 810 level, maybe as high as 815, which is not much higher, and it will stall out and it will put in a major top. All right, if you've been looking at the insider selling, folks, that is ugly insider selling. Not only has Schmidt sold 3.2 million shares or whatever crazy amount it was, but insiders are selling like crazy in this. And to me, it's kind of striking about Apple, right? Apple at 700. Could Google be the next Apple and collapse down to, let's say, $500 per share from 810 or so, or 800? So even though I've been telling my members to stay away from Google and just move away, let it go higher. Now I'm saying it's starting to look interesting as a possible short when it gets above 800, which again could be as early as Tuesday of this week. Wednesday, obviously, as I said, Monday's closed, so Tuesday, Wednesday of this week, maybe it pushes up above that 800. I think that even number is the spot, though, folks. I do think that even number is the spot. All right. Apple, let's take a look at Apple. Apple was down another $6, over $6 on Friday, still holding above the double bottom here. But I'm telling you right now, this is going to go lower. All right, based on everything that I'm seeing, unless they somehow announce the next cure for whatever, this chart is a very, very tough chart because if you look at it, it closed above the 20 right here. There was no confirmation. If you had confirmation, you'd have more confidence in the upside. The lack of confirmation, which again is a proprietary technique we teach here at InTheMoneyStocks.com, tells us very blatantly that it does appear to be very weak. Any weakness in this market, if we do get a pullback like I'm expecting, then I think this thing not only falls back to the 440-ish area, 435 area, but I think it could actually go all the way down. If you zoom out, there's a gap fill right here around the 420-ish, 423 area. I think that would be a very likely scenario, and there's a possibility it could even go down and pierce the 400 level. I think once it gets to 400, 420, I become a very interested buyer, though. Very, very interested buyer on Apple. Okay? All right, so that's what we have going on with Apple. BlackBerry, former research in motion. This one has just been a wild chart. I continue to hold to my game, saying this will eventually go back to $10.50. All right, 200 MA, pivot low, little gap fill, former gap fill level, right, all in the same area. This is where it's going to go. It got a nice little bounce off the 50 MA, but on Friday came right back in. Once this takes out and confirms below the 50, it's going to go right here, and that will be your downside target. Okay, so just be aware of that. I want everyone understanding that's where this thing will go. Once it gets there, you will get a fantastic bounce, in my opinion. Most likely, the market will pull back, and then we'll see the same type of thing go on where it gets a good bounce when the market gets a good bounce type thing. You'll see traders rush back in. Baidu continues to just slowly bleed lower. This is a perfect example of a bleeding chart. You had the gap down on earnings, and then ever since then, it just slowly goes lower. It's not dropping $3-4 a day. It's dropping $1 a day, and it's just kind of death by 1,000 little down days here. The buy price down here is going to be around the 86 to 88 level. That'll be the first area I get interested in. If it looks like it's going to break through there, believe it or not, I might let this go all the way down to about the 75, 76 area. All right, 75, 76 would be a very intriguing level. I do like that level. We'll have to watch it very, very closely. All right, Chevron was down 75 cents on Friday. This stock, again, interesting with this stock because, again, it went right to my sell point, which was the gap fill. Look at that perfect gap fill right there. That's exactly where the top was. We talked about that in the research center here at InTheMoneyStocks.com as well as in the intraday stock chat. Ever since then, it hasn't really fallen sharply, but it's just slowly creeping lower. It now is below the 20 MA, but hasn't confirmed yet. Should this confirm, it's going right to the 50. I do think eventually it will touch that 50, might even go lower. I have a price point right here with the 200 rising. You also have this area right here. This is your general vicinity where you expect it to be a longer-term buy and bounce level. So again, For those of you that are patient, look for a buy price in the 110-ish to 109-ish range. I would say closer to 109 to be safe. That would be the area where you'd start to expect a very solid multiple dollar bounce on this chevron chart. All right, folks. So we've covered a lot of charts here. I'm always more than willing to cover more, but I got to save some stuff for my members as I search for key trade setups. Well, what I'm going to try to do this week is we're going to try to take some quick gains on some swing trades too. So I'm expecting to get filled on probably about 3 swing trades this week and actually try to move out. My goal is again to move out of them by the end of the week for all profits. So again, join us here at InTheMoneyStocks.com. We're going to make some good money this week. Let's keep our heads down. Let's keep analyzing this market correctly, and let's see what China does on Sunday night tonight into Monday and Monday into Tuesday, and then the same thing with Europe, and then we see how the futures trade. All right, guys, have a great afternoon. Again, we'll see if we get that downside this week based on time counts that I'm expecting, and we'll go from there. Take care.